We have a wonderful guest speaker that is here with us today from AF Group. We have Katie Janik, who's a senior training specialist. And with that, Katie, I will turn it over to you.
Thank you so much for that warm welcome, Tandeka. And I love all of the encouragement to the group to join on camera, to connect with your peers and colleagues in the industry. I think that is the voice that we at AF Group also echo when thinking about our next generation of insurance professionals. And just here to highlight that, we're here to be a partner with all of you and looking forward to exchanging with you guys. So I'm a huge supporter of engagement. I want to have fun with you guys. I want to ask some questions, answer some questions. So feel free to drop those in the chat or raise your hand. Let me know. If for whatever reason, Tandeka, I missed somebody raising their hand, just let me know so I can address that as we go. But I will be definitely closely monitoring the chat to see if there's any questions in there. So to help us get started, I do just have a little bit of an icebreaker, an opportunity for us to get active in that chat, which is what region or what food is your region most known for? So maybe you can drop in the chat, what state or area that you're in and what is your region most known for? So Katie Janik, I'm on the agency education team with AF Group. We do a lot of webinars and trainings. We do a lot of continued education credits for our agent partners, some policy holders, and I've been with the organization for almost 8 years. My career has definitely been a little bit of a squiggly line. I haven't always been in insurance, but I somehow landed here and love what I do. I also love sessions like this, connecting with individuals who are working on their education, learning and growing, because I'm a lifelong learner, and if I can influence you to do the same, I'm all for that. But what food is my region most known for? I live in Wisconsin. We are known for beer and cheese, and better yet, fried cheese curd. So if you ever have the opportunity to try some of those, definitely give it a go because you won't be disappointed. Thank you for those who are dropping in the chat there. Pepperoni rolls. Oh, in West Virginia, awesome. Philly cheesesteak. Oh, Tandeka peaches. I love that. So, oh, melting pot. Okay, Anthony. Blue crabs. I love that. Hot honey chicken sandwich. Carly, that sounds amazing. So thank you so much for your engagement in the chat there. So today we're here learning a little bit about workers' compensation. This is kind of like a 101, the basics that I'm going to cover and talk about today. So really excited to be here with you. And again, like I mentioned, I'm looking forward to answering some of the questions that you might have about workers' compensation. So I do want to chime in, though, first before I get into our content and what we're going to talk about. We have the pleasure of having Michelle McLean on the line, our Senior Vice President of Business Development. She is a board member of Spencer Foundation and also serves on the scholarship committee for the Spencer Foundation. And Michelle, if you want to share a few words, would love to hear from you if you're able.
Now I'm just hungry, Katie. I want cheese curds now. So I'm a transplant from Wisconsin. I live in Arizona and I did not participate in the chat, but I think like the food that I should have put in the chat is probably fry bread, which also isn't in my diet plan at this moment, but very, very good if you have an opportunity to try. But thanks for that introduction, Katie. As she said, I'm Michelle McLean. I run our middle market national account group, as well as what we call enterprise distribution, which is some of the high-level strategic work that we do with our national broker partners. Spencer has been, an organization that I've been involved in for a long time, stemming back to prior career at Liberty Mutual, but I've been in the industry 21 years. And I will say, like when Katie and I were talking this morning, just quickly prepping for this call, this stuff and this opportunity to get in front of the next generation of talent is hugely impactful and quite honestly brings this group a lot of joy. I know Mike Maurer is on the call. Joe is also here. This is the fun stuff because, most of us got here by accident. Some of you are probably going to be more intentional with your college major choices and, paving a way in risk management. But it's a phenomenal industry. The sky's the limit in terms of opportunities. And so we're really excited today to be able to hopefully provide you with some good content and the basics of work comp. But I think more than anything, please take advantage of the networking opportunity. You've got leaders and executives from our group on the line. All of us are willing and able to connect on LinkedIn to answer questions sidebar separate from this presentation. So please take advantage of that to the extent that it would be helpful for you. And with that, I'm going to turn it back over to Katie.
Thank you so much, Michelle. She's so right in that we genuinely care and are super passionate about helping to influence or guide that next generation. And AF Group is really happy to be able to partner with Spencer Foundation. So without further ado, because you're all here for the good content and the information about work comp, I'm just going to kind of high level show you the agenda here. We're going to cover things ranging from the history of work comp. Where did it start? Where did it come from? Or what led to our work comp system? Those injured employee benefits. We're going to talk briefly on employers' liability, claims, loss control. We're going to get into the experience mod and how business owners can influence their experience mod by having good safety measures in place. I'll talk a little bit about return to work program and why they're so important, and touch briefly at the end on pure premium rate changes. So again, just encouraging you to ask questions if you have them. To kick things off though, I actually have a little video I'm going to share with you all just to kind of set the foundation of work comp and enjoy it as much as and I'll be back in a little bit.
Hi there! Since you're watching this video, we're guessing you're interested in knowing what workers' compensation is all about. Well, you're certainly not alone. Work comp isn't something people think about very often, and when they do, they likely have more questions than answers. Over the next few minutes, we're going to provide you with a brief history of work comp to help you understand why it's needed. Workers' compensation is insurance that provides protection for employers and employees. The concept actually began hundreds of years ago with pirates. That's right, pirates. Like, arr, that kind. In the days of yore, a pirate's life was not easy. The job of sailing the seven seas, robbing, pillaging, and generally being despicable was not only dangerous, it was downright lethal. To motivate the workforce, ship captains like Blackbeard, Redbeard, and prematurely Graybeard developed a compensation system to help those injured during the course of their less than upstanding business. If you lost an arm, you were paid a fee in gold. Lost an eye? That was covered too. In fact, a complete fee schedule was developed to cover almost any injury. We're guessing maybe 3 doubloons if you need that little peg leg set up. The result? Ship captains, the employers, were able to keep a steady workforce, and pirates, the employees, were motivated to keep working without walking the plank. Now, obviously, in the modern world, most employees are not pirates. Well, copyright issues aside, modern working conditions have fortunately improved far above the days of piracy, and so has workers' compensation. Today, employers purchase work comp coverage from insurance companies, similar to how you might buy personal, auto, or home insurance, and the policy protects employees who work for that employer. If someone gets hurt on the job, the insurance company pays for lost wages, medical benefits such as doctor's appointments and medications, and other benefits to the employee. The result is twofold. First, employers are protected from big claims that could wipe out their business. And second, employees receive the care they need to recover, return to work, and get back to the business of leading healthy lives. And that, my friends, is workers' compensation insurance. And it's something our company has provided with excellence for more than 100 years.
All right, so it's a pretty good video, right? It's kind of entertaining, maybe made you laugh, a time or two. It's a little lighthearted, but it's actually really educational. And if you leave here with anything, I hope that you're leaving here knowing that our pirates back in the day are the ones that really influenced this work comp system. So there's your fun fact that you can take away from today. Okay, all joking aside, the history of workers' compensation, obviously it goes back many, many, many years ago, and it's evolved over time. And so we're gonna kind of take a look at that as we move forward. So 1700s, the pirates, they were this first group of individuals to kind of use a work comp system. You know, thinking back about a peg leg or somebody with a hook, right? They were injured on the job. They were injured on the pirate ship, and they were compensated with those gold coins and jewels and things like that. You saw that in the video or heard about it in the video. And so that was, the work comp system. And as things evolved into the 1800s, there was the Industrial Revolution. Would love to hear from you in the chat. I'm taking you back to your history classes. What type of work was happening during the Industrial Revolution? no pressure, but what type of work was happening during the Industrial Revolution? Can you recall or think back to kind of what was happening back then? Machine shops, factories. Thank you, Patrick. Yeah, dangerous conditions, right? So coal mining, machine shops, factories. There was even children working in these shops and in these working environments. So as you can imagine, there was lots of injuries that were occurring. These individuals didn't really have a lot of money. They didn't have the ability to seek, medical treatment because they didn't have a lot of money. So that is definitely, a concern, right? We think to move forward to the 1900s, the 2000s, right? This transformation started to begin. So I'm going to tell you a little bit about this transformation, but I want to strongly encourage you to go Google the Triangle Shirtwaist Tragedy, which happened in 1911, and read about that because it is a really monumental scenario that happened that really impacted change for the work comp environment. So Triangle Shirtwaist Tragedy, there was a business located on the top floor of a tall building in downtown Manhattan. The owners, they didn't really care about safety. It wasn't a priority to them. In fact, they were worried about their employees taking too many breaks. So they locked the exit doors. They didn't fix one of the elevators, so only one of the two elevators was working. So when the building caught on fire, people couldn't get out. They had to choose if they were going to jump out a window or if they were going to stay in the building and unfortunately lose their life. So the tragedy that happened that day was that 146 people lost their life. Very tragic. The only positive thing that came out of this tragedy, though, was that it caught the attention of the government and it kind of jump-started this work comp transformation. So we're going to, see how all of these events really kind of led to where we are today and where that work comp system actually helps to balance things out for both the employers and the employees. So when we think about those employees, they have benefits when they're injured on the job. And I'm going to talk a little bit more about those as we move forward. So workers' compensation is in place for these businesses. The employer is protected from litigation, and the employee is in turn provided these work comp benefits in the event that they're injured on the job. It's kind of like a give and take relationship here. If a business chooses not to have work comp coverage, the employees could potentially sue that employer, that business. So that's really why we are here to help encourage and work with in partnership with business owners and who become our policyholders to have insurance so that they can protect their employees and protect their business. That's where that balance comes into play. So what is work comp today? It's here to help promote industrial safety so that injuries aren't happening in those factories and in those workshops and things like that. This is in partnership with OSHA, right? They set these safety standards so that accidents are avoidable, so that incidents like the Triangle Shirtwaist tragedy doesn't happen. It's in place to help protect those employees. And so we're going to be looking at a map shortly, but the U.S. work comp system is a patchwork of individual state laws. You'll hear me talk a little bit about that as we go on through the session, that work comp is not black and white. It's a very gray in that there's a lot of different factors that influence the events that occur, like state statutes and state laws that are in place. But you can see that they all share the common goal of getting medical treatment to those injured employees, getting them lost wages if they can't work, making sure that other individuals aren't injured from that same incident, right? So we learn from what happened so that we can avoid injuries from reoccurring. So we have this map, right? So depending upon, what state you're doing business in or working in, your choices in work comp coverage can vary. So some states only have private carriers that sell work comp. On the map, those are the gray states. An example is Missouri. Michigan. Some states require work comp coverage to be provided exclusively by the state. These states are called the monopolistic states, and you can see they have the red M on them. An example is Ohio. In some states, you have a choice of getting work comp coverage from a state fund or a private carrier. These are the blue states. An example is Texas. So again, as businesses go to get insurance, it depends on the state that they work in. Some businesses might have operations in different states that might influence the policies they have in place for their business. So workers' compensation today is also influenced by these different laws and jurisdictional impacts. So when we think about those cross lines of different states, you might have a choice of what state benefits you want to collect. So for example, in my role, I travel for work. So I work for a company that is based out of Michigan. I live in Wisconsin, but let's just say I'm traveling to California to teach a class and I get injured on the job. I technically have the right to choose if I want Wisconsin benefits, Michigan benefits, or California benefits. Sometimes we see that injured employees choose the state with the best benefits because they vary depending upon the state. All right, don't forget to drop those questions in the chat. So when we think about work comp benefits, does anybody know what some of those benefits are? Go ahead and drop those in the chat if you're familiar with the benefits that an injured employee might receive. You may have heard me mention them, you may have heard them in the video, or maybe you have already learned about them. Excellent, thank you so much for that. Alyssa, indemnity, medical, absolutely. So we have medical services. We obviously want to get medical treatment to those injured workers. We have lost time wages or indemnity benefits. We also have rehabilitation services, so physical therapy, occupational therapy. There's also death benefits in the event that somebody loses their life on the job. So as we move forward, we're going to look at medical benefits. Anywhere from one medication to home health, to x-rays or therapy, that's all going to be kind of covered underneath those medical benefits. One thing that I really always love to share is that if an injured employee has a significant injury that impacts their ability, their mobility to get in and out of their home and they need a wheelchair or to go places, we actually have coverage for home modifications. Like, so some people have a ramp installed so that they can easily get in and out of their home with their wheelchair or their walker or, things like that. So I think that's really just something that we don't always know is available for injured workers when they have a significant and severe injury. We also have these lost time wages, right? So an injured employee is injured, their doctor says that they're not able to work for a period of time. They are going to earn an income from the carrier. They're going to pay 2/3 of their average weekly wage. So that is payable after the state's waiting period. So you heard me mention about how work comp, it's not black and white, it's a little bit gray, right? So some states have a 3-day waiting period. Some states have a 5-day. Some states might have a 7-day waiting period. There's also a retroactive waiting period so that if you're off for a significant amount of time, you actually can get reimbursed for those initial days that you were off. So all of those different guidelines and those state statutes influence how a carrier is handling and managing that claim when it comes through. So you see on the slide, there are these 4 different names of benefits, and that really is just impacted by what that injured worker is able to do when returning to work. Are they able to work their full duties? Are they partially disabled, like they can only work 20 hours instead of 40 hours? Are they receiving a permanent partial disability? They've reached their maximum medical improvement, meaning that the doctor is saying, hey, we've gone through treatment, we've done laser therapy, we've had surgery, and unfortunately, this is where we're going to be. And they provide, a permanent partial disability rating, something that somebody's going to have for the rest of their life. They have a shoulder injury, range of motion is never going to be like how it was before the injury happened. They may be receiving a permanent partial disability. That's something that they're going to be impacted for the rest of their life. There's a payout associated with that for those injured employees. The states, they say how much money that injured employee is going to receive. The carrier pays them that dollars. Maybe it's a one-time payment, maybe it's 3 different payments, or maybe it's a certain dollar amount until they've reached the total. It really just depends on the state statute. And then, of course, there's permanent total disability. And permanent total disability is when somebody's had a life-altering injury. They're not able to return back to the work, even in a different career field. So they are permanently, totally disabled, and they're going to receive financial support for the rest of their lives, essentially, right? So these are all available to an injured employee. All right, rehabilitation. Again, you guys are probably familiar with the terms physical therapy, occupational therapy. Somebody injures their hand, they're probably going to have occupational therapy to really rebuild that strength in their hand. That's something that is really important. But something that people don't always know is that there's actually vocational training and vocational rehabilitation available to injured workers. So in the event that somebody needs to pivot their career, they've worked in a machine shop, or they've worked on cars, or they've been a construction worker, and they need to pivot because it's just their body can't handle that work anymore. Now maybe they're going to go work in an office. Maybe they're going to go work in sales, but they need some training to learn how to be a good employee in that new field. So they could potentially receive vocational training or vocational support to help them pivot their career path. It's a really great benefit that not everybody knows about, but now you guys do, which is great. This last benefit is the death benefit. So unfortunately, there's injuries that impact people's lives, and we lose valued family members from injuries on the job. And so this death benefit is in place for surviving spouse, surviving family members, and they're going to receive support for their dependents or loss of earnings. And that's all going to be influenced by the state, right? So if you no longer have a family member who brings in a paycheck, there's going to be dollar amounts that are figured out based off of that average weekly wage, how much they were normally earning, and that's going to help support that surviving spouse or children. There's also a burial allowance. So we know funeral expenses are a lot, right? And so there's an obligation by the carrier to provide a certain dollar amount to that family to have a proper burial funeral. So every state, they influence how much is going to be paid out by the carrier. Could be ranging anywhere from $3,000 to $10,000 or $15,000. It just depends on the state, and every state looks at that differently. And so those benefits are available to those injured workers if they have a loss of life related to a work-related injury. I don't see any questions, but again, still here encouraging you to ask them. Now is the time. But as we move forward, I'm just going to continue to share this wealth of knowledge with you. We're going to touch briefly on employers' liability. So
there's
yes.
one question in the chat box right
just
now
popping
from
up.
Patrick. Yeah, and Patrick, I don't know if you would like to ask your question, if you're in a space where you want to unmute and
Hopefully my
ask.
background isn't too loud, but I can definitely ask that.
Yeah, we can hear you perfectly.
Sure. So I kind of had a more specific question, just based on how the process works. So if a business has work comp coverage, can the employee opt out and still sue, if they think that the workplace doesn't respect like their worker safety?
Yeah, that's a really great question. And so, Michelle, I see you on camera. Do you want to answer?
No, go for it, Katie, and I can chime in. You're good.
Okay, great. So an employee can't really opt out, right? So like comparable to, a health plan where you're like opting out from your employer, like, oh no, I have health insurance with my parents, or I have health insurance from a partner, whatever the case might be, you can potentially opt out, right? So this is not something that you can opt out for. And in exchange, like you kind of heard me here earlier, like the employer has this coverage available to its employees, and in exchange, you lose the right to sue. But if a business owner was like, you know what, I don't need work comp insurance, I'm not going to have that insurance, they're not going to provide it to their employers, they're at risk of a lawsuit if they're injured on the job. But to take that answer one step forward, what I want to talk a little bit briefly is on that worker safety, right? So it's important for employers and businesses to have proper safety measures in place, right? And if an employee felt like their work environment wasn't safe, an employee could contact OSHA to say, hey, I don't feel safe at my employer, if they felt that that was necessary, right? But in most cases, I think it's really about talking to your employer if you felt like there wasn't something that was properly set up. If you're working on a machine and there's not correct guards or things like that, you'd want to talk to your employer about that. But that's very different in relation to the coverage that's available. If the business owner has coverage, work comp coverage, an employee can't opt out of that.
I see. Thank you.
Yeah, absolutely. Great question. Thank you for that. All right, so going back to employer's liability. This coverage provides protection for an employer against common law liability. So for injuries to employees in cases that aren't covered by work comp. It's oftentimes referred to as stopgap coverage. It's kind of like an added umbrella, if you will. So we like to look at it like the best way to understand employer's liability is if work comp is part A coverage and employer's liability is part B. So if an injury isn't covered by work comp, then it potentially could be covered by employer's liability. It's like added layer of coverage or insurance that businesses have. All right, now let's take a look at claims. This is where the questions I feel like get really good. So claim services. What do you do when an injury happens? Well, we really encourage that those policy holders, those business owners, they get that injured worker the medical attention that they need right away, right? They are the number one priority. Their safety is and health is number one priority. So get them the medical attention and then report the claim. So we encourage our business owners and our policyholders to use the customer portal. It's really easy to log in and submit your first report of injury. There's intensive questions and information that you can share. And so it's much easier to share those injury details of what happened and details about that employee, when they started working, all of those things. And so they can do that right there in the portal, and it creates a claim for them. And it's really easy to even know who your claim adjuster is going to be handling that claim. You also have the ability to identify, like, is that injured employee still working? Are they being accommodating? Are there restrictions in place? Whatever the case might be, they can even upload a return to work slip. So we go to the doctor, we get a return to work slip, we give that to our supervisor, our HR business partner, and they can upload that right into the portal. It's really easy, it's really efficient, and that's really the best way to do business. So what happens once we receive that claim, the investigation and the claims adjuster, they start reaching out to that injured worker. They get additional details if needed from that HR contact at the employer, and they move forward with that claim, getting that injured employee back to where they were before the injury happened. So why is it so important to have those claims submitted timely? Because lag time drives claim costs. So as you can see on the screen here, claims being submitted at 1 week, 3 weeks, and 4 weeks are kind of highlighted here. At the 3-week marker, those costs were 28% higher. At week 4, those costs were 44% higher. So unfortunately, we really want people to submit their claims timely. And you can do that by creating that culture within the business, teaching your employees what to do, who to go to, how to submit that claim. And that's also going to help in taking care of those injured workers. If injured workers feel like they're being taken care of, they're probably less likely to get an attorney, which is also going to save significant costs on the overall claim. So, something I want to ask you guys, has anybody ever used telehealth care, telemedicine? You were like feeling sick, you got on your phone, got on your tablet, you connected with the doctor. Maybe you had some allergies or a sinus issue, connect real quick on there. They're able to get you some medication. It's really easy. It's really efficient. I've used it. It's really great. And I've even used it for my daughter. Well, we have that same concept, but for injured employees, and that's called telecom care. So injured employees, they can call a phone number, they get connected 24/7, 365 with a nurse triage line, and they're able to provide them with support on what to do based off of the injury that's happened. So it significantly impacts that lag time on reporting those claims. We find that about half of those injuries are actually self-care. So you've got to cut, you got to clean it, keep it dry, put a Band-Aid on it, change, every 24 hours, change it, right? There's a follow-up call even, right? So there's really significant ways for our policyholders, our business owners to save money. It significantly impacts the financials of these claims. So it's a great avenue, telecom care. It's really easy. And if you ever are sick and you do need to connect with a doctor, definitely encourage telehealth. It's super easy and super efficient. So Anna, I saw you had your hand raised. I'm not sure if you were just saying that, yes, you've used the telehealth, or if you were wanting to ask a question. So just let us know if you had a question. Feel free to come off of mute and ask your question and let us know. If not, that's okay too. All right.
Or if anyone else has a question, this is a great time to ask it.
Yeah, absolutely. I know you're all soaking in the information I'm sharing with you. Okay, Anna, awesome. So glad that you've used it. It's easier to know, like, okay, yeah, what would it be like for telecom care? Just to, like, get on the phone, have a little video chat with that doctor. It's really easy, really efficient to do. Okay, so we've talked about how that employer is going to submit that claim. The claim adjuster is going to start their investigation. They're going to get all the details and facts that they need for that claim, and they essentially determine compensability. And so when we think about compensability, there's a couple different criteria that need to be met. First is that it needs to be accidental. But second, it needs to arise out of employment. So arising out of employment is essentially that the injury was caused by something related to that employee's job duties, tasks, assignments, whatever they're responsible for. So that injury is arising out of employment. The second, or the third, I should say, is that the injury occurred in the course of employment, directly related to the time and place in which the injury occurs. So, for example, if a maintenance worker was going to check on a sprinkler head that wasn't working and slipped and fell due to water on the ground, well, they would have been doing something that they were responsible for. They're a maintenance worker. That's normal task that they do. And then also, they were at work. They were on the clock. It was during normal business hours. A really great example of when those criteria are met. So again, a work injury needs to be determined to be compensable. All right, so what are reserves? Does anybody know about what are reserves? When you think about claims, what comes to mind when you think about reserves? Feel free to engage with me in the chat or come on microphone.
Are there any actuaries that are with us in the group today?
Yeah, reserves. Okay. I'm not seeing anybody chiming in. Ooh, okay, yes. This is the money answer. Yes, okay, money set aside for the claim. Exactly, I love it. So reserves are also known as the financials, right? They're the financial dollars that are set aside by the carrier to pay for those upcoming bills that are going to be received. So you have an injury, you go to the emergency room, there's going to be a bill that's coming. You have an injury, you need an ambulance ride to the hospital, there's going to be bills for that. You go to the doctor, there's going to be bills for that. So this money is set aside to help cover those bills. So it's the financial dollars that are going to pay for those bills, okay? Usually these reserves are set based off of the claims assessment. So you get all those facts and details about the claim. You get information about what that treatment program looks like, what the doctor is going to do to help get that injured employee back to life, back to work. And usually that's set within the first 7 to 14 days. We want to make sure that we have that money set aside so that when those bills come in, there's money available for them. So what does that look like? Okay. So workers' compensation reserves, they're really influenced by, the claim assessment, right? So we're talking medical expenses, those wage loss indemnity payments that are paid out when they can't work, loss adjustment expenses. These are all subject to change based off of the facts of the claim. An injured employee obtains an attorney, cha-ching, those reserves got to go up because there's going to be legal fees. Okay. We need an interpreter on the line, cha-ching, we're going to pay for an interpreter so that we can communicate and exchange with our injured employee. Maybe there's even an interpreter going to a doctor's appointment so they can fully understand what it is that doctor is requiring out of them to ensure that they have a smooth recovery. Okay. Claims can also, or reserves can also change if somebody is seeking, physical therapy. They're going to physical therapy sessions, and then all of a sudden we determine that that's not helping and they're going to need surgery. That would significantly increase those reserves. So they're subject to change, and it's always going to be based off of the claim's value. Okay. All right. Switching gears here just a little bit. Would love your engagement as we talk about loss control and experience modification. I'm going to have an image on the next slide. I would love for you to put on your loss control hat. So I know there's quite a few people in here that are going to have that risk management, loss prevention mindset. So what's wrong with this image? Go ahead and drop those answers in the chat. All right, yeah, there's leaning boxes. There's risk of collapsing on workers. Those pallets are messy. Definitely a huge concern. It's overall an unsafe workplace. The boxes are stacked too high. If there was a fire in this warehouse, do you think the sprinkler systems would work? The floor kind of looks a little dusty. It's hard to see where the aisles are on the right side around those boxes and those pallets. Would we know if there was a forklift coming around the corner? Lots of injuries. It even looks like there was maybe a spill, down that hallway there. Definitely not really the best working environment. So we have loss control consultants who go out to employers and businesses to take a look at their environment to identify these concerns, these risks, these exposures that are in place for their employees. All right, here's another one. What looks unsafe here, or what's wrong with this image? Yeah, you could fall off the ladder. The number one rule when you look at those ladders, it says like, this is not a seat, or do not sit here. In fact, you're not even supposed to step onto that other, ladder shelf. I can't think of what it's called. There's no helmet. PPE is a concern. It looks like he's maybe changing the electrical, but is the electrical off? Looks like these light bulbs might be on. So again, we put on our loss control hat, we assess, we observe, we identify those unsafe working conditions, and we make suggestions on how businesses can make their working environment better. And we do all of this to help in creating a safe work culture for the employees that work at that environment, that work within those facilities. We want to make sure that there's not slip, trips, and falls. So we recommend specific mats to put down in the entryways, or if it's a kitchen, there's specific mats that you might have in the kitchen to avoid those slips, trips, and falls, encouraging non-slip shoes and all those kinds of things. Healthcare workers wearing goggles, gloves, a mask if needed. So the safety culture is influenced by leadership, and having a strong safety culture is really being influenced from the top down. And we're here to help support our business owners, our policyholders, in creating this safety culture that's positive and strong so that we can avoid injuries from happening in the first place. Okay, So what is experience rating? Experience rating is really a way of tailoring the cost of insurance to the unique characteristics of a business. Like, what are their operations? What do they do? Is it a restaurant? Is it a hotel? Is it a manufacturing facility? Okay, so that experience mod is created to encourage a business to have a safe work environment. Okay, so the fewer accidents we have, the lower the insurance premium. The frequent accidents equals higher insurance premium. So the experience mod really goes hand in hand with loss control, because if a business is preventative and has a safety culture, then they will likely have fewer accidents, which leads to an experience mod credit. And on the flip side, if a business doesn't partner with loss control and doesn't care about having a safety culture, they will more than likely have more accidents, which is going to lead to an experience mod debit and really going to impact that premium that they're paying. So let's take a look at an example. Okay, we've got restaurant A and restaurant B. Restaurant A has an EMOD of 1.23. Their premium is about $307,000. We have restaurant B, an EMOD of 0.88, and their premium is $149,000. Which restaurant has the better safety culture? Which restaurant makes safety a priority? Great job, folks in the chat. Restaurant B, absolutely. So how does loss control and customers experience mod create a competitive advantage? Well, really, this is an important piece that really not all agents recognize or even convey to their business owners. So a business that creates a culture of safety could have a better EMOD that will directly impact their bottom line financially. This can be used as a competitive advantage when comparing like businesses, just like you see on this slide. So the experience mod for a business is really similar to a credit score for a person. If you pay your bills on time, you probably have good credit history. You will probably have a better credit score. And if you don't pay your bills on time and have a poor credit history, you would have a lower credit score and you probably have to pay more if you need a loan or things like that. So the same goes for an experience mod. The safer a business is, the more likely the business is to have an experience mod credit. So when we think about restaurant A, they have an EMOD debit, which represents their lack of the safety culture. Where restaurant B shows a commitment to safety, and that is proven in their EMOD credit. They have less injuries, they pay less for insurance. It's a really great analogy for us to understand why it's so important for businesses to make safety a priority. All right, so return to work. Why is it so important to have a return to work program? We have employees, they're injured on the job. The doctor says that they have restrictions like right hand work only, or they need to be sitting for a period of time during their work shift. Why should our business owners bring them back to work and accommodate their restrictions? Because it's proven that return to work programs lead to employees returning to work quicker. So we can see here, this is a study that was done to look at time away from work and how likely they are to return. So at 12 weeks, there's only a 50% chance of an employee returning to work. At 6 months, that chance of them returning drops to 20%. And after 1 year, there's only a 1% chance of returning to work. If injured employees are off of work, they're less motivated to return to work because they're receiving a paycheck. So we really encourage employers to accommodate restrictions because it builds and maintains the relationship that that employee has with their employment. They enjoy being connected to their coworkers, their colleagues. They enjoy feeling like they have a purpose. So if those business owners can accommodate those restrictions, it's really going to benefit them. It's also going to save them a discount on their EMOD calculation later, because those medical only claims, they get a 70% discount. Significant savings for their experience mod. So what does return to work look like? It's really about transitional work or modified work, or maybe even those reduced hours. It could even be job sharing, where one employee is able to do the heavy lifting and then they're passing the torch to the injured employee and they're finishing up the tasks or steps related to that job. So you heard us talk about the statistics and everything, and it's really about coming up with examples and ideas of things that your employees can do within the workspace. Could be safety videos, reviewing the handbook. It could be auditing. It could be answering phones. It could be calling and doing a satisfaction call with a recent customer. It could be evaluating or monitoring work tasks just to learn more about what others do within the organization. And you can work in partnership with loss control to come up with a list of things that employees can do if they are given restrictions by their doctor. All right, we're moving along here. Don't forget to ask those questions in the chat if you have them. So pure premium rate changes. I'm curious. I don't have a poll question I'm going to push out, but I'm just curious. Drop true or false in the chat for whatever you think. Pure premium rates account for administrative and other overhead costs that customers could potentially have. Is that true or false? Oh, thanks so much, Lucia. I appreciate that. Have a great day.
And maybe repeat the question one more
Yes,
time for
I
those
was
that
just
might
going to
have-
repeat. Yes,
Perfect.
pure premium rates account for administrative and other overhead costs that customers could potentially have. True or false? So are those pure premium rates, are they included, is that administrative tasks and stuff, the overhead costs included in that? It's okay if you don't know the answer. Great, okay. False, lots of false. Okay, yeah, great job. I'm really proud of you all. The answer is false. So pure premium rates do not account for admin costs. They actually account for the losses that your client can expect to pay for adjusting and settling those workers' compensation claims. Okay, so great job. Anthony, we don't normally share the slides, but Tendeka is going to have the recording, so you can always reach out to her if you want to go back and look at something. And then, of course, if there's questions, feel free to reach out to me anytime. Okay? Okay, so those admin costs are not included. All right, so every state has a rating bureau who determines the average rate to cover work comp losses by class of business. So a class of business is based off of the operations of that business. We have restaurants, we have hospitality, we have healthcare. There's lots of different healthcare, right? We have construction, we have agribusiness, you name it, they have a different class of business, okay? So each year, the rating bureaus, they establish a loss cost for each class code, okay? Administrative, based on the payroll, right, and loss information reported by that insurance company. The loss cost, or that pure premium rate, is the amount needed to pay for adjusting and settling the workers' compensation claims for each of the class codes. So the insurance company then applies a loss cost multiplier to cover their expenses and profits. So that's kind of where those calculations come into play when we think about rates and what business owners are being charged for. So just hopefully that's been easy to understand. So it's decided by the bureau of what that rate looks like based off of the class of business. So if it's restaurant, or if it's roofing company, if it's an admin company, it's all going to vary based off of that. What type of operations does that business have? What class codes do they have within that business? Okay, so with a substantial decrease in pure premium rates, expected losses will decrease, but actual losses typically stay the same, resulting in a negative effect on your client's experience modification factor, that EMOD score we were just talking about. This can lead to an increased experience mod, and in turn, this can negatively impact the pure premium rate changes for the customer. So as you progress in your career, if you're working with an agent, we really encourage agents to really think about how they could potentially help their clients offset some of these changes. So we would encourage them to help their clients reduce their experience mod by implementing an early return to work program. We talked a little bit about that. They might even help them in creating a safe work environment to prevent those injuries or even the severity of those injuries. Help in maintaining good hiring practices, having quality training, really making sure that those employees know what they're doing before they start on job. Okay. And then also we really encourage, checking the calculations on the client's EMOD worksheet for potential mistakes. You just never know if a number got entered in wrong or there was a zero added to the end, whatever the case might be. We just really encourage double checking that EMOD worksheet for potential mistakes. Okay. So we talked about the evolution of work comp, starting with pirates and where we are today. There's definitely been this strong evolution that's happened. The value of workers' compensation has grown, keeping employers and employees top of mind, getting those injured workers back to work, back to life, back to where they were before that injury happened. But most importantly, we talked about how helping businesses embrace a safety culture, they're going to help their clients in creating a safe environment for their employees, and that significantly can impact their financials. But in order to do this, there needs to be some partnership with loss control, and we want to really make sure that we're accommodating their restrictions by implementing a return to work program. So all of these things together can be done by building and maintaining a quality relationship with the work comp carrier, with the designated loss control consultant. So as you continue in your careers, just be sure to know that safety really is number one, and it really is going to impact the financials for those business owners that you might be working with. So that is pretty much all I have for today. I'm happy, of course, to answer any questions that you guys might have. Our site is down right now, but just want to give a call out to our agency education website. We do have some on-demand e-learning courses on there. We will be back up and running probably in a couple weeks. So feel free to check us out in a couple weeks for some additional educational and learning opportunities. But again, happy to answer any questions that you guys might have. Thanks so much for your engagement today. I really appreciate it.
Thank you, Katie. We truly appreciate it. Any questions in
Happy
the
to be
chat
here.
box or anything before we wrap up this session? And we do have a couple minutes also. If anyone wants to stay on, we could definitely participate in some virtual networking as well. But
Yeah,
any questions?
absolutely. I'm all for that. I will stay on the line. Here, happy to answer any questions. Thank you so much for your time. Good luck to you all in your studies, in your internships. And if I have anything to say regarding that, is just don't be afraid to ask the questions and stay curious. You want to learn about something, just stay curious and find out more, because I promise you the person that you're asking, they probably want to help you learn and they want to help you grow in your career space. So don't hesitate to ask those questions.
Love that. Completely agree. So, for all the students that are here with us today, as you know, we host these sessions on a weekly basis throughout the summer. So, next week's session is going to be on Thursday, August 1st from 1 to 2 Eastern. Our presenting company is going to be Zurich Insurance, and they're going to teach us how to prepare for fall campus recruiting season, which is right around the corner. So with that, Katie, thank you again for hanging out with us for an hour and being here with us. This was absolutely awesome, and the students learned a lot.